How you guys doing? Everybody good? Did you guys eat lunch? Did you have lunch here? Wasn't that amazing? That was incredible lunch.
Great.
It was really good. So it's always great to be here in Singapore this time of year. I love it. It's and today's that day that like after going to Japan and then going to Korea and then coming here, that you're like, I want to go home. So I think everybody's ready to make it home tomorrow and get back to wherever we came from. But before we do that, we'll spend some time talking about DATs and what everybody's working on in the market. So I'll let everybody do a little bit of introductions of yourselves so everybody knows where you guys are coming from.
Hello, my name is James Ambrose. I am with blockchain.com. I lead our digital asset treasury solutions group. And so what we're doing over there is we're leading the industry in investing, advising, and bringing on digital asset treasuries to blockchain.com to its suite of institutional services. So we've been really early so far. We've invested in near 15 DATs across a variety of tokens across a variety of regions, and just really lucky to be here today. So thank you.
Thank you.
Hello, everyone. My name is Renan. I'm running Moonhill Capital. We're a digital asset fund. We did like 50% of VC investments, 50% secondary market. I'm originally from Slovakia. My residency is in Paraguay, and I'm staying mostly in Southeast Asia, so kind of weird stuff.
Hi, everyone. I'm Ciara Sen, founder managing partner of C Square Ventures. Sorry I have to came in my Halloween makeup, I guess. So, advice from this is that when you remove your contact lens, be very careful. The parts, if they left in your eyeball, you have to do a surgery to take it out. So that happened earlier this morning. But at C Square, we do investment in Web3, and we do both venture, liquid, and of course in DAT investment. And prior to fund C Square Ventures, I lead investment and listing at Huobi, also run the institutional arm and retail growth in regional markets. I'm very glad to be here.
Thanks for joining us. And I'm Chris Maglino. I'm one of the founders of DNA, and I've been leading up all of our work inside of the DATs that we've been working on. We've worked on a lot of public companies. I've taken 3 different companies public myself, and then we've worked with hundreds of public companies. We own a business that is, oddly enough, it's a unique convergence, completely unrelated to this. We own a business that does marketing for public companies to help their stock get trading. So it's kind of a unique mix of, timing on all of the crypto stuff converging with this platform that we own called Sequire, which is a cap table management platform for public companies. So I think that you guys are seeing a lot of deals. You saw the first ones. We have this phase of like, this is the hottest trade in the entire world. Now there's God knows how many of them. I don't know how many. I have a list on my, my trading view that's like, treasury deals, and it just keeps getting longer and longer every day. And so there has to be some kind of unique story to each trade that's out there. What are you guys thinking about this particular trade now? What are you looking for in the trade as, when they're coming across your desk?
Yep, I'll take that one. So I think what sets some DAT pitches apart from others is, to give a really boring answer, a really simple and clear execution strategy. There's a lot of these companies and DATs that are launching without a clear line of sight onto who their custodians are going to be or what their overall, long-term strategies are going to be. And so having a clear execution strategy around day 1, 2, and 3, all of your 8Ks are going to be filed. You're going to dox your holdings on chain so people can monitor them to see how much of the asset you're going to be acquiring. I think these really simple benchmarks and kind of messaging and organic marketing that people can put out there into the space, I think is really clear in what sets, some unique, bespoke DAT strategy to the ones that we've seen really succeed so far.
I quite agree with what you just said. The long-term strategy is really important because these DATs, they just need to create something, some additional value. It just has to be working the underlying assets. They need to bring yield. And then what is also important for us, we've seen few small DATs, and we just don't believe in that small DATs anymore, because
What's small?
100 million or so, it's not small, but it's small, right? But when you're looking at some DATs that are like Solana ones, 1.15 billion or something like that, that there is already, these institutions are kind of borrowing them the status of a reliable one. And then when DATs are here for institutions mostly, and institutions are pouring capital where others, they're also like sheeps a little bit, right? So the bigger the DAT is, the more demand we could potentially see there. And so far we think like there was one issue already that we experienced with SUI DAT. The stock market was already below the asset valuation, the treasury valuation, and they needed to rebuy their stocks. So that's also part of the strategy that we would like to see with DATs, that they are prepared for something like that. Because like you mentioned at the beginning, these DATs, the valuation, they went crazy. And these days it's already, there is some premium, but not that huge. And it will get even more equalized, I would say.
What we look for. So, first, when we invest in DAT companies, it's the first mover advantage. We are clearly the first one in each region, definitely has the edge, right? So we invested in 1723 in Hong Kong. We also invest in the first one in Korea. Those ones are doing well. And then, when it gets like layering the stage, we will look more closely. It's just like when you're investing in ICO stages, you have to do your clear due diligence on the teams. And there are three things we pay attention to. First, I agree with the other speakers, is transparency. How to use price it, what's the exit strategies, and how to use macro makers. A lot of the things needs to be transparent. What's the mixture of in-kind contribution and cash that you're going to raise? So everything needs to be transparent. And second is compliance and more like regulatory risks. Are you using isolated custodian? How do you work with the audits and accounting? And how do you work with the CFO for all of the information that we require? But that's very important. And third is governance. Who can touch a treasury? What's your buying strategy? What's your repurchase strategy? So how does that work, right? Do you write everything down in a contract as well? So those three things combined make a very strong management team. Then we'll definitely invest. Like we invested 5 million in the DNA and Aether deal. We believe that the team is very strong, and all those things that we just mentioned is very, very clearly stated.
Well, thank you for your investment in that deal. We appreciate that. I think that I could imagine that a lot of people come to, because they come to us to pitch us on their DAT idea as well. And they don't have all those things that you just talked about, which are key. And I don't think a lot of people even realize that those things are something that they need to have. They just have this idea about getting their token listed and having it out there. It's a great marketing tool for the token to have this. And but I think one thing that I'm finding to be important is the first phase of these things was just about owning the token and the MNAV of that, right? So just, for everybody that doesn't invest in these things all the time, you have the value of the underlying token against the assets and the price of the stock, right? That becomes the value of the company. And a lot of these deals, they were at first were trading at, one point this, 1 point that, even above the value. But now they're all coming in at 0.7, 0.75, 0.78, because everybody's realizing that these tokens have to be contributed at a discount in order to bring the value to attract the capital from these guys in order to let them take the risk. Because at the end of the day, the value of something can be trading down 30% off the asset value. And if the investment came in at the right level, then you guys are still making money. So the question being, how has that changed for you? How do you guys view that today? Are you still willing to do deals that are 1% and above, or 1.0 and above, or Are you looking for deals that are a certain level below the net asset value?
I think that we are largely trying to stay pretty flexible here. I think depending on the asset, it definitely varies. I think a lot of the Solana deals that just happened were all at close to an MNAV of 1 or 1.1. And when you have a great founding team and great management team for a tier 1 asset, I think people are willing to pay premium for that. I think the deals that are also very exciting for us are the deals with, intense partnership from the foundations. And from that perspective, for us, it's quite important to have that sign off from the foundation, have that LOI signed from the foundation to buy those tokens at a discount. And that overall is really accretive to the value. So I think it really depends a little bit on what the asset is and what the management team is. Kind of to the points everyone said before, there's a few different criteria on how we're able to evaluate things on what's the asset, what's the MNAV, what's the discount. And so just across all those things, I think there's different formulas that could work with each of these DATs.
Yeah, again, I quite agree with you. But to be honest, last 2-3 months, we stopped investing into DATs because we already felt that there's a lot of buzz around it. And when there's too much buzz around something, we kind of don't like it anymore already. We want the, dust to settle. Well, the dust is settling. So maybe it's kind of start again. Yeah, it's a good point. Yeah, it's a good point already. But even like we invested into I tier, into zero gravity. We were early investors, and we decided to skip this DATs just because there was not enough time to do proper due diligence for us. Everything was moving really fast, and on VC side, you have so many duties. So we didn't feel like prepared that we would be really confident we are able to enter these deals, unfortunately. And what I would like to see is some DATs that are acquiring not only one asset, but also some multi-assets. That would be interesting for us, maybe.
Well, of course, price matters, right? But it's not the only thing that matters. It's just like when you're investing in an ICO deal, like for example, like a perp DAX. Some are valued at 20 million, some are maybe valued at 500 million. But you make money probably, into investing in the 500 one, if it's a killing team with good ops for the exchange side, when the 20 million one can still die. Take Solana as example, I think. We just recently catch up with the foundation. There are 17 other ones in the pipelines coming up. It's crazy. So who can actually survive, right? So whether you have a really good and strong relationship with the foundation, also strong partnership with the ecosystem partners, like Jupiter, like Pump Fund, all of the key players in the Solana ecosystem. And then secondly, the ability to keep raising and form institutions. You have to be bringing more liquidity, right? And then very clear execution plans and make sure that company actually works. It's still a company in the end. It's just not just another capital game.
Yeah, that's actually a great point, right? They all started off as these kind of failed small cap public companies that just needed a life, right? And so through financial engineering, they were saved and everybody made a little bit of money on the way back up. So it was good for everybody. But we're seeing a transition out of that now where these companies need to do something. They actually need to be more than just a holder of the underlying asset, right? And I think that NASDAQ is making that clear in all of the rules that they've put out there to date. So I think that's a great point. But are you guys seeing that as well in new deals that are coming your way, that there's a level of actual business in the underlying public company?
Yeah, we can see that, but I don't think that it's something like very sophisticated so far. Just like some staking and maybe borrowing, blending, and this kind of stuff. So it kind of works like a different type of foundation, I would even say. So this is what we are seeing, and I don't know, maybe you see something else.
I'm going to go back to the point I said earlier in simplicity. There's some DATs that are launching now. I think I saw one the other day that is a DAT focused around bankruptcy claims.
I saw that one too.
And when you start getting into these weird bespoke strategies, I'll be honest, it just gets a little bit harder to value. And to the point earlier, it's like when you're buying an asset, holding it, doxing your holdings on chain, you're able to get a lot of momentum that way, just organically. And so there's totally an argument to be made for these bespoke strategies around buying tokens at a severely discounted rate from liquidation. But just from our perspective right now, I think simplicity is really key for us, and it's where we think it might be a differentiator. So, buying, staking, doing a few vanilla things here and there, some protocol investing in the underlying asset and the ecosystem that it operates on. But besides that, we've largely been, I guess, staying away from some of the more obscure.
Here's where I naturally show my portfolio company again. I have to mention Aether and DNA. It makes sense, right? It's a DPM project that actually have GPU computing power. You can rent GPU with Aether, and you can get yield. You can do lots of things. It's a real business, right? There are businesses like this out there. That's why we're investing in the token, reinvesting in OTC deals, and now investing even more in the DAT company.
Yeah, so in Aether, we put along with yourself, thank you. We put $5 million into the DAT, but we also are putting $20 million in compute into the business. So the $20 million in compute that we're putting into the business, which is over 1,000 H200s, will generate $30 million a year into the public company. So here it is, an oncology company that had a AI. They were using AI to try to find a solution to different diseases that had zero revenue. That is now going to have $30 million in revenue, the first year, just because we're contributing the underlying compute. Because we know what the compute is making, because we have it all staked to Aether now. We were the largest, or one of the largest providers of compute onto the Aether ecosystem. So we're intimately familiar with the yield that's happening on there. So now we can take that same compute and revenue that was happening on the DNA balance sheet and the income statement and move it over to the public company. We're just gonna go rent another 1,000 H200s for ourselves, but we can contribute this into the ecosystem and put them in a really good position. So now you have a real business. It's not complex, right? Like the one you mentioned it's things like this get confusing. Then you might as well just be a different business. It has to be relatively simple, but something that is happening. I have an interesting question for you, because you guys are in the treasury management as well, right? So you manage the assets in these things. How important for you is that when you're investing? Like, is it is that a requirement for when you're investing into these deals that you get the treasury asset management in the transaction?
No, certainly not. We are insanely flexible in the way that we've been able to structure these deals so far. We've written a handful of blank checks to these companies. We've been able to invest in companies and also receive some of the OTC flow on the back end of these things. And in a few of these examples, we've helped structure these deals in partnership with the foundation. Our CEO, Peter's on the phone with these foundation partners every single day. And a few of these deals we've structured ourselves, and our management team has stepped into board seats. And the one to call out there is TON Strategy Co. Blockchain.com is the largest custody and staking provider for TON globally, and where we have huge conviction in the TON ecosystem. And our co-founder, Nick, stepped onto the board for TON Strategy Co. Our CEO, Peter, is a strategic advisor, and Blockchain.com is one of the select staking and service providers for them. And that's not to say that TON Strategy Co. needs to custody and stake all their TON with us, and they're not. And it would be prudent to not have proper risk management diversification across all these strategies. And so we remain super flexible in the space. We see ourselves as long-term partners the same way we are investors. And from that extent, like we're super excited for what's next.
And how do you guys mentioned it earlier, but how important for you is it that obviously you have a very responsible, capable company managing the assets? Is how, when you guys are looking at the deal, are you preferring that they have certain people in the transaction to manage those assets? Is that's important to you?
Definitely. It's one of the three I mentioned is the governance. I think it's definitely the key, especially for long-term survival for the DAT companies.
Completely agree.
So one thing,
Yeah. I think another important piece here is that these companies need to be cash flow positive. If you have a huge OpEx and overhead costs, what are you going to be selling the token that you're a treasury company for to be able to pay an inflated headcount spend? And so I think really strategic partnerships with the advisory or management firm where, quite frankly, you can bake as many services possible into kind of that structure, from a marketing perspective and overall structure and operational headcount, from kind of bucket that all into the management and advisory services, allows the treasury company to keep their costs all the way down and obviously keep as much of the treasury asset as humanly possible without liquidating.
one thing that we're seeing, and that, like, when these all started out, it was all the public companies that needed to be taken out, right? They needed to do something, or they're going to get delisted from NASDAQ. And so you have to go through and you have to comb through all the problems that they have, which are multitude of issues that they need to contend with, a lot of which you don't discover until after the transaction's over, when you find out that there's this weird thing that happened, and then you have to settle that up in some form or fashion. You do your best to uncover these things up front. But I think there's a new wave of these things that are coming next that will, just be direct listings where, you don't have to worry about the problems of a previous transaction, right? So it's just a much cleaner way for it to happen. It might take a little bit longer, but that might not be a bad thing right now, because what we're finding is that in the transaction that we just did for Aether, the investors are all people that we know, right? It's not a bunch of people that are these mystery investors that people think are coming into these deals. Like, you hand this over to the regular investment banks and think that they're going to go out and raise a bunch of money for these things, but they introduce you to the same people that are investing in everything, and you have to tell them the story. And really what we're doing is educating them about the process and what's happening. So I think that now you go to a point where people will take their time. It's not going to be as rushed. It's not going to be this like from Wednesday to Friday kind of raise. Because, we were working on another transaction with a big token, and we had the company. It was we had raised like $70 million for this thing. The stock was at $1. The MNAV was like 1.1, and then the stocks. Somebody told somebody about what was going on. The stock went from $1 to $9 in a day. It went from $1 to $9 on the day we were supposed to close the deal. It went from $1 to $9, which took the MNAV from like 1.1 to like 2 point something. And we were supposed to put in a bunch of money. We're like, we're not going to do it. We're not putting money in at a 2 point something valuation. It's just never going to happen. So those kind of things are, well, just to finish the story, then the public company said, deal's over. You have no more public information. And then they sold like 10 million shares off their shelf and solved all their problems. So now they're a really well-funded public company because we went out and told the story about them, and everybody thought they were doing. Now everybody is invested in a electric car company and a drone company, but not a crypto thing. And now the stock's back to like $1. But the company and the management has all the money that they need to make it happen. So that's a long way of saying, what do you guys think about kind of alternative structures than just this quick RTO kind of thing?
Yeah, I think the first thing is, one, I would just love if you called my bankers and got them to extend all my commitments that are due end of day today. Because I think I might be missing out on a few just sitting here. Yeah, I'm totally over the get wall crossed on a Thursday, have commitments due by a Friday for a token I've never heard of. It's impossible to do due diligence on the underlying token. It's impossible to do due diligence on the target pubco. That structure needs to change. And a lot of these bankers are using it to like incite FOMO to get all these commitments in. And hey, it works a little bit. But now obviously everyone's been fairly risk off. A lot of the pockets have dried up. It's not to say they won't open up. Bitcoin's trading out like 118 right now. It might be on its way up back up to 120, 125. And, narratives change quite quickly when things like that happen. I think on overall structure, we're still pretty bullish on the pipe perspective. Like while the list of target pubcos is shrinking immensely, I know you know this for sure. I think there's still some good ones out there, and I think the ease of the pipe transaction is still what people are valuing more over the long extended kind of SPAC process, or direct listing. But the expedited view of I think the pipe process is still beneficial.
Yeah, so this question gets me back to what I just said, that we haven't invested into any DATs in the last 2-3 months because everything was in a rush. And yeah, at the beginning when the first DATs were here, obviously we want to extract some money, right? So we needed to act in the rush and we needed to act really fast. So we did it. But then, as there were many of them, we just slow down and wait. And now I'm really happy that it gets us to this slower pace. And obviously, from the VC investor perspective, I really like DATs and everything what's happening around, because it's like a bridging of institutional capital from like pension funds and so on that are not entitled to invest into underlying assets, but they are able to invest in stocks. So I like to see that. And from the other point also, the tokens from foundations, they are not doing OTC sales like we could see this year everywhere, but they are putting these tokens with discount into DATs, and those tokens will be locked there for a long-term period. So I like where it's evolving, really. But I also see some structural risk connected with DATs because when we're looking at the market, there's not real leverage over there, but that can be created really strong leverage on the field of DATs, and it creates a really risky environment. So I'm curious how it will evolve next year.
I think to Chris' point, it's very important to invest and work with the guys that you actually know, right? When I feel safe when I invest alongside other investors who put in 5 million into one DAT company while they hold 20 million of the tokens. They definitely want to make it work. And it's important to know that when the liquidity is out there and when you actually get the shares, not everyone's going to dump together. Because that actually happened for a few of the DATs out there, right? Those early ones. And it's like, it seems very fancy and great that you get all of the liquidities on day one, but it's actually no day one, right? Like, if to go through all of the tiling, everything, working with the SEC, there's no day one. So
Day 90.
Yeah, so you have to have a long-term mindset when you're investing in those companies and really work alongside with them and help them grow, just like investing in another token.
Well, guys, that's the end of our time here. I really appreciate you coming here and talking to us today. It was really nice meeting all of you and spending some time with you. So thank you very much, and good luck with all the future investing in this area.
Thank you.